Right, guys. There's a few guys in the room I can see, so we'll get it on the way. How are you guys this morning? How's trading? How's things good? Sound check as well, quickly. Anybody? Hello?
There's an awful background noise.
Sounds not good. All right, bear with me. What about now? Is that better?
About that, guys. I think we had some technical difficulties with the mic. I've just sorted it out. Hi there, Jim. I can hear you. Yeah, perfect. I do apologize for that. Anyway, just to get the ball rolling, it's the 4th of April. Just to introduce myself, my name is Neil. I'm one of the traders on the floor over here. Just to go through the disclaimer, obviously, any information or anything that we give across is not deemed as advice or is purely for educational purposes only. And you need to take that into account in regards to when viewing the material and the certain things that we say. We're not holding ourselves liable for any type of advice or any damages resulting off the back of the content. It's just to cover ourselves as a company. But obviously, the proof is in the pudding, and obviously, when the stuff stands out, it does help you guys. But I've always got to just go through the disclaimer just to cover ourselves anyway. To get things going off today, I think what we're going to be focusing on is looking at fundamentals, because that's a major thing which a lot of you guys in the group, a lot of you guys, especially the guys that are learning, I think overlook. And you do have to look at fundamentals for two main reasons. It's a little bit like going out and not looking at the weather conditions. If you know that it's going to rain, you're going to have to take a coat with you, and that's the same sort of situation in the markets. If you know, for example, like at the moment, there's an underlying thing going on in the markets with the whole Trump issue and Russia. I think that's the big thing at the fundamental forefront. Is Trump going to get a second term or not? Now, between me and you, when Trump came into power, that was a complete contrarian view. That was completely against the masses. Hillary should have got, well, Hillary was the one that was for him to come in power. Trump came in, the market's done 25% off the back of it. Now, that type of fundamental event doesn't happen every day, every week, every month. But when something like that happens fundamentally, it stays in the markets for a few weeks and months, if that makes sense. So it's always good to be aware. The only other thing is Brexit. Officially, we're meant to be leaving in June. I don't know what's going to happen. I haven't got a crystal ball. I lost a hell of a lot of money off the back of Brexit thinking that we were going to stay in last time. But obviously, you can't always get it right, especially as a trader. Sometimes you do run into strings of losses, and that's mainly when you bring your ego to the table. But let's go on to fundamentals now anyway to get the ball rolling. What I'm looking at, what I get guys always to go through, is the economic calendar. Now, is there anybody obviously here? Have you guys got any questions like directly or anything that you want to know yourselves personally, or should I just cover it wholly? Just because I don't want to make sure that I'm not missing anything. You guys now all looking at the economical calendar when you're logging in before you make any trades, yeah? Maybe not. All right. Um, Try to. Good, Patrick. You should always be looking at news now, not only economical data, but social media news and stuff like that. Things that you're going to see on CNBC, things that you're going to see on Bloomberg. If you start to see something come across the whole board, like for example, say Trump getting something or Brexit on BBC News, you know it's likely going to hold sentiment in the market. It doesn't always happen, but now and again you will see that, if that makes sense. Yeah. Now, it's always good to be reading the news. Who knows? There could be a terrorist attack, natural disaster, something could happen. And sometimes it can give you free definition or free fundamental understanding about where the market's going to move to. This stuff should be in your day-to-day regime as a trader. You should be sleeping, and breathing the news because it gives you free information. If you're going to trade in the markets for 1,000 days or 2,000 days and expect that you're not going to be looking at the news or making yourself up to date with it, you're living in la la land. It's a myth. You need to be aware of the news. And I know I stress on it quite a lot, but because it helps you, it gives you a roadmap in the market. Yeah. Now, coming back to the economical calendar, obviously, which is crucial because economical data not only needs to be taken aware of, but you need to know what the data is doing because it can affect the sentiment of the currency. Yeah. Now we do have a massive news week this week. We've had some medium importance CPI and stuff like that out this morning. It's come fairly in line. We've had little moves on the market, nothing to gun ho about. But this is the you can see, for example, this is the news action. The news events nowadays are quite flat. 2 or 3 years ago, when market conditions were a little bit more volatile, the movements were a lot more. The only times really, I think I've gone through this with you guys, where you see the bigger moves is when these figures come out unexpected. Yeah, the lower importance ones don't really move the markets. The things that you guys like as a trader, like I like to make you guys aware of. Wednesdays, you got oil inventories. Yeah, that's this one here. That's a mover. That moves the market. Yeah. Now, just so happens as well, we've got FOMC on Wednesday as well. These speeches are they're hit or miss. Sometimes they move it, sometimes they don't. No one's got a crystal ball. The times when you get the bigger moves are when something unexpected happens. Now, when that unexpected thing happens, you'll see it in the media. You'll see it in FX Street. You'll see it on Forex Factory. You'll see it on all types of things. Now, that's why you read the news. If you're not reading the news as a trader, it's like boxing in the dark. You're only using half of the information. Yeah. Now, also Friday, first Friday of the month, we've got non-farm payrolls, guys. This is key. This is a big mover. Always moves the market. Previous was 313. Expected at 198. If that comes any higher, you're going to see a strong dollar and vice versa. But it's always good. Non-farm payrolls generally gives a lot of movement in the market or gives direction for the next few days afterwards. So if you're trading non-farm payrolls and you've got a weak dollar or strong dollar, according to where the orders are, these are things that you need to be aware of. If you want to catch moves fundamentally where you're growing the accounts, where you're catching maybe a move over a 2 or 3 day session, you need to be aware of these fundamentals and how these events can push it in. Now, there's two ways you can look at it. You can either trade the news trading strategy, which a lot of guys do, which I know Paul goes through with you guys quite a lot, which is quite simplistic, quite straightforward, easy to take a few pips on the day. Or you can trade it how I trade it, which is I prefer matter of fact. I prefer to be in the market with my stops at break even. So if the news comes out and pushes the market in my favor, happy days, but I don't want to gamble off the back of it. Yeah, I had a disaster when I first started trading non-farm payrolls. You've also got to be a little bit wary of the execution around those times. When the news comes out, sometimes you can get slipped. When I was a junior, I put some orders in the markets trying to sell and buy at the high and the lows, and sometimes they widen the spread. So do be aware of that as well. And obviously execution in the opens and the news can be a little bit choppy. As especially students, you guys need to be made aware of that. Yeah. Now, you guys, is that quite comfortable? Do you guys want to know anything individually? Like, there's a few major events. You've got non-farm payrolls, you've got CPI for each €1, you've got FOMC minutes happens on a Wednesday, rate decisions for European Central Bank on a Tuesday, Bank of England on a Thursday. I think Kuroda usually speaks on a Thursday evening or Wednesday evening. So these things are just there. They need to be made aware of. Oil inventories definitely moves the market. Obviously, people understand why oil inventories. One thing I'd say is the reason why it has a direct effect correlation with the dollar. Commodities have a direct correlation with the US dollar. Obviously, the US dollar is 70% of the liquidity that sits in the whole market. That's why it's so effective. That's why if a terrorist attack happens in the US, like 9/11, it's more impactful than if something happens in Europe or, for example, sake in like Asia, because it's the biggest market. It's the one that's most readily affected. Yeah. Apart from that, otherwise, like looking at sentiment wise in the news, there's a lot going on with Russia. I'm sure you guys have seen it. No one knows really what's going on with Putin, but I thought Trump and Putin were trying to make a little bed or alliance, but it seems that Trump's now pushing away from it. Markets are red across the board. Obviously, you guys know, if indices are red across the board, currencies are generally quite stronger. If European equities are down, it's just something which can help with correlation trade and management. It really works on management. The thing that you guys need to really get through. The news helps with trade management. Entry is part of the fact. You still need to sell high and buy low. That's the first rule of trading. You guys already know that. So as long as you're selling high and buying low, you use the fundamentals for trade management. Yeah. Now, have you guys got any questions? Because I know it's not that thing. I just want to know if there anything you guys want me to go through on the news or look at or anything you don't understand. Don't forget, you guys. I know there's only a few of you guys in here at the moment. If you think something's too basic and you don't want to ask, this is the best place for you to learn about fundamentals. If you go to Baby Pips, they've got a whole section on it, and it goes through and it breaks it down fundamentally, and it's what hawkish decisions are, what dovish decisions are. It's chapter 12. Don't be shy, guys. If you want me to go through anything, or go back through anything, always ask. Yeah. People ask me, do I use FX Street, Forex Factory? I prefer both. I really like Forex Factory and FX Street. Never use one. Always make yourself contradictive across the board. Yeah. Now, since no one's got any direct questions, we will be going through the news time and time again. Yeah. But what we're going to do today, and I think which is crucial, is London Open. I know we've touched on it briefly. I just want to go through it from the basics. Now, one thing I always trade is supply and demand. The reason why I trade supply and demand, to make it clear to you guys, is because the market's order driven. The market doesn't care where you want to get in or where you want to get out. The market cares where the orders are. Yeah. Now, if you have a look at the charts, yeah, what you understand is that the institutions have a different problem to the problems that me and you have. Yeah. For example's sake, they have to disguise positions. So what I mean by disguise is they have to build positions to move the market in one way. So for example's sake, I can tell that the institutions have got 1 million lots there, another million there, another million there, and they aggregate positions. Now, the key difference that all retailers need to understand, because everybody wants to follow the smart money, everyone wants to go with the institutions. The thing is that the institutions, what they do is they don't buy and sell at mediocre prices. They will never buy up at these levels. They will never sell at these lows. They always buy low, sell high, because it's self-fulfilling prophecy. The banks, they work on wholesale. They work on volume. They're not going to buy at a worse price or sell at a worse price. They're always going to sell at the high, buy at the low. That's why it's always good to know where the market is on an intraday trend. As a day trader, you only care where the price has been and where the next trend's going. Does that make sense? We don't want to get caught up on the fact that where we're trying to foresee too many variable factors. Some clients look at it and they get held up on too many thoughts processes, thinking that they know. Take the theory and the education that we're giving you as literal as possible, because it degrades you on a larger account to get rid of pitfalls where you can lose money. On a small account of like 10k, you could lose £500, but on a £500,000 or £1 million account, one mistake can cost you 50k, and that could A, change your mindset, B, change your psychology. That's why there's rules on top of rules. There's one thing that I'm going to highlight on, and this is off topic, and I know sometimes I do go off topic, but it's when I remember something, yeah? You should never ever, the third rule, which I'm sure I've started to go through with you guys time and time again, is you never hold a position over a losing session. So say, for example's sake, you take a trade during the London session off supply and demand or one of your strategies off London Open, and by the time the US market's closing, your stop hasn't been brought to break even, or you haven't cut the trade, you shouldn't hold. I heard a client tell me the other day that if I had held the trade overnight, the price would have come back. That's absolute nonsense. That means your entry was awful and the market would have probably taken you out more often than not. The reason why you don't hold a trade over a session is because you cut the element or the advantage of day trading. If you allow the market to move against you over a few sessions, that's how you get taught a real lesson in the market. That's where your ego's on the table. If you bring your ego to the market over 1,000 days, you're going to run into a string of losses. Mathematically, you're going to have 10 or 20 losses. That's why staying in the game long term. A lot of newbies, what they do is they come in the market, they follow the strategy, and they fall in love with the result. They either win or they lose, and it puts them off or gives them a full sense of security. What you guys want to start to do is fall in love with the process, fall in love with the placing the orders and managing the orders. When you're placing orders, it's the easiest way to trade. You remove all discipline from trading because you're only getting in at the high and the low prices. It's where you trade where there's no clear direction, where you push the button, where it becomes a lot more emotional and you need to be a lot more clinical in your decision process. Yeah. So just going back to order flow, because order flow is something that we're going to touch on again and again, but it's something that you guys need to be made aware of because the price will always run into orders. So this is just really just something to touch with you guys. Yeah. The price is always a tug of war between sellers and buyers. So at this level here, there's clearly more sellers because the price pushes down into levels. Now, where the sellers are, the sellers are looking for buyers to come in the market. Now, at this level, there's definitely buyers that have come in because the price has come reverted back up. Now, that's all the market ever is. It's a tug of war between buyers and sellers. Make sense? Now, to indicate whether there's more sellers and buyers in the middle of the range, the longer you stay in the market, the more less accurate it's going to be. What you guys want to be looking for is opportunities at high and low because it's more likely that the institutions are going to look at the price and go, hold on, that's at a good discount, let me get in. Make sense? Yeah. Now, what you understand is that as a day trader, if you hold the position over a 24-hour period thinking it's going to come back, A, your price was wrong. B, there was no orders where your order was. And C, you're now bringing your ego to the table. If you bring your ego to the table, you will lose a hell of a lot of money. Trust me. I've done it. A lot of my friends have done it. I've seen a lot of people do it. There's one key difference. When you work for a bank and you trade, there's no emotional attachment to the capital because you're losing the bank's money and you get paid a salary. Make sense? When you trade your own funds, it's something which you have to be, it's all about emotion. You have to battle your emotion on the highest level. When you're trading a 10K account, it's nothing. You can draw down 10K, you can make 10K. It's about whether you can do it consistently and keep the balance. That's where the real trick is. You should always consider your trading account as a workhorse. It should never be considered as something that has no end result or no beginning result. It should be used as a pure workhorse. You should expect fluctuations in the account, but also you should expect you should be you shouldn't let the fluctuations affect your decisions, if that makes sense. The moment it affects your decisions or you stop doing the process, that's when it doesn't make a difference. I've seen so many guys trade London Open for 20 days, do so well out of it, and then have a losing day and stop. Who told you to stop? Just keep placing the orders, keep going through the process. When you see the results, you're going to be able to tweak something. The market's not hard. As long as you understand where the orders are, you're going to understand where it's going. Then it's about staying in the game. A lot of guys, what they do is they open an account, they trade for 2 years at break even, and then they go for it and they lose their money. That's what you're doing there, is you're gambling. Don't gamble in the markets. If you want to gamble like that, you've got better odds in the casino. What you're looking for here is you're looking to take an entry, so make sure that you're selling high or buying low, and then allowing the market to tell you which way it's going to go. Now, mathematically, if you open 1,000 trades, 22% of them will run in your favor and grow the account. Yeah. Now, coming on to London Open as well, because it's something that is crucially, well, I think should be traded by everyone. On a 15-minute, 5-day range, when the price is in the middle of the range, that's when it's so choppy. That's when London Open will happen and it will break into sell orders that were here, or it will go into buy orders that are here. That's the most common pitfall about London Open that all retail traders don't understand, is that why does the price reverse? The price reverses because it goes and finds orders. It happens off the back of the news as well. You'll see non-farm payrolls come out, it'll be a weak dollar, and then the dollar will be going up because the price comes into orders. So just to go through that with you guys, when London Open happens, you want to be placing orders above, below. Make sense? Orders at the low, yeah, are bigger stop losses, 3 to 5 pips. Orders in the middle of the range are 1.5 only, guys. Make sense? Because you're trying to take the move. Now, you can variant this strategy, yeah? You can tweak it and trade it from the middle of the range, but also you can tweak it and trade it with no trailing, just with a target. Yeah, it is case by case, student by student. Yeah, so there are a few variations on it. We do switch it up for each individual. It does really depend on account size. The bigger accounts, you can get a bit more variation out of them. You guys also have to understand the smaller accounts, it's a lot harder to get that type of growth that you guys want, because it's easy to make money on a small account, but it's not the value of the money is the problem. If I make you 10% on 1,000, you still made £100, and that's one thing I want to get into students as well. You need to start to place risk management, especially on something as like a 5 to 10k account. Anything smaller, yeah, you might have shown a 20% return, £200, but you've got the upside and downside potential as well. You want to remove that. You want to bring it scalability. You want to bring it down so it's more consistent and it's more risk management applied on 10k, where, for example, maybe you're using a 200 to 500 pound daily allowance, where you're using 5% of the account, growing either side. With the rebate, you can quite quickly, you're breaking up. Is it quite bad? Is the mic quite bad, guys? Sound check? Or is it much better now? Sometimes. All right. I'm not too sure what's happened. I'm going to order a new mic, but I think something's happened with my... sounds good at the moment. Okay. I'm not too sure what's happened. I think something's happened to my headset where the mic's not tuning it properly. But don't worry, I'll get that sorted out for the next session anyway. So just to go back through, yeah, when the price is in the middle of the range, you're going to get tug of war. The price is going to go and find orders. Now, in the middle of the range, sometimes the levels get invalidated because supply and demand, don't get me wrong, they do sometimes go through. They don't always. Now, something happens when they get invalidated. Something happens in your head because you think the level's going to hold up. Yeah. Now, I'm going to teach you guys something which I think all you guys must have, especially if you want to stay in the markets long term. If the markets are being driven by technicals, supply and demand levels have a high probability of holding up. Yeah, so if they're getting moving just through the technicals, they've got a high probability of holding up. Soon as anything comes out in the news, it throws it all out the window. So then it moves off fundamentals. Now, the sooner that you guys can identify that, the quicker you know if the market's trending or range bound. That's one of the major things. Is it snowing or is the sun shining? As a trader, you want to be able to know that. Yeah. Now, coming back to that, the quickest way that I identify it is simplistic. Yeah, I'll take any chart, yeah, and what I'll do is I will take a blank one, for example, 15-minute, 5 days, yeah. Now on this, what I would like to do is draw support and resistance. Yeah, a lot of you guys have seen me draw support and resistance. It's completely different to supply and demand. Support and resistance is just areas where the market is reactive to or the price cages around. Does that make sense? Now, a lot of you guys may say, why is this guy drawing loads of lines on the screen? You've got to understand, the market's zone to zone anyway. The price moves from zone to zone. Yeah, what this does, it gives me a roadmap in the market. That's the way I find it. But you never ever use support and resistance for entry. You only ever use it for trade management, looking where to get out. You just use it as an extra roadmap. It's never used for entry. You never get in off just a support and resistance line. You have to couple these things together. You have to have skills in the market. You can't just use one thing. Now, what you'll find is supply and demand and support and resistance match up together in some points. Yeah, where those levels match up together, that's where there's more likely that the institutions are placing orders. So look, million lots, million lots, million lots, million lots. Yeah. Now the banks have to build positions and push it past through key levels to get liquidity from retailers to get out of their big position. The market's zero sum. The money's got to come from somewhere. The money just doesn't come out of the air. Yeah. Now, in regards to that, what you guys are looking for is how they're building positions. Now, the positions are always built off the back of what the fundamentals are doing, because the fundamentals is what drives the markets for a matter of weeks and months. Make sense? For example, weak Brexit. We had Brexit. Sterling came down into key levels. For example, I'll show you on a longer time frame so you guys can see this. This is Brexit, for example. Weak fundamentals, clearly institutions have bought here. Nothing's happened with Brexit since, but the price is continuously going up. Yeah, I think if this reverts these high levels, it's not coming back. I don't think you're going to see sterling back down at these lows. Clearly, institutions have bought down here. Yeah, now that's similar. The euro has similar trends on a longer time frame if you guys look at it. Yeah, now coming back, sorry, I do not. Coming back to the 15-minute 5-day, whether to identify whether the market's trending or range bound, if within a 5-day range, if you suddenly start to see that there's no lines on your chart, yeah, so for example's sake, you come into these areas, yeah, or these areas up here, you know that the market's moving fundamentally and you need to find out why. If it stays in these 5-day ranges, it's moving technically. Make sense? That's when you want supply and demand holds up better, because all supply and demand is teaching you how to get in. Sell high, buy low. When you get in and you're holding the price, all you're doing is you're finding out for free whether you're right or wrong. Now, when you sit in the markets as a day trader for many days, that has to be a must, because if you can't understand that, you're not going to be consistently profitable. You might win here, you might win there. Let me tell you something else. Anybody can have a winning trade. Anybody can make money in the markets. Anybody can lose money in the markets. Can you do it day in, day out, week in, week out? That's what we're looking for. We're looking for guys that are passionate about the markets and want to be paid for their expertise or their understanding. Yeah. Now that is probably the only fastest way for you to identify whether the market's trending or ranging. Now you can see here the market's trending on dollar yen. Now if I come in on cable, for example's sake, the market does look a bit. It's come out of the zone there, you can see, but it's come back in. Like it's not at the moment. The markets are moving technically. Supply and demand is holding up at the moment. Yeah, so you guys are aware of that anyway. Yeah, so here it's gone out of the range. Can you see that, you guys? You can see supply and demand's run out in that 5-day period, for example, say. Now that is the only fastest way for you to indicate as a day trader, because nobody's got a crystal ball. If you ask me where the market's going and I told you something, I'll be telling you a lie. Yeah. Now, coming back to something else as well, because that's one of the fastest ways to indicate whether the market's trending or range bound. You don't need to couple this with the news to be more effective. Now, I want to come back to orders, yeah, because I know some of you guys place orders. When you place multiple orders, there's something that you need to pay close attention to. It's the precision on the orders. If you've got 10 orders, you need to make sure, A, that you've got your stop losses in there, your trailing stops correctly with the right amount of pips on each side, because I see a lot of clients that send me P&Ls and there's small execution errors because they're either placing the orders in a rush. Anybody can place the order. You're just placing the same order, so you should get the same result. This is what you guys need to understand. Trading London Open and supply and demand with orders is probably one of the easiest ways to trade. It removes all emotion and is set and forget. You can manage the trades offhand or risk off. That makes sense. Now, when you're getting in from the high and the low, yeah, you guys, you need to make sure on the low of the time frames, if you're in buy zones, the buy has a 3 to 5 pip trailing stop or a 1-to-1 target, and the sell still has a 1.5 pip trailing stop. Now, if the market's getting driven by fundamentals like what's happening with the euro at the moment, because it's broken that level, if you lot noticed here, that was a low, but can you see it's broken it here? That was actually the low, but I suspect now this is going to continue. But don't worry, we've got non-farm payrolls. That's going to give an indication. Non-farm payrolls is going to come out, push the market down into orders, and it's going to go long, or it's going to push it back into these levels here. That's it. There's no two ways about it. That's what probably everybody's going to be waiting for now. We've obviously got oil inventories this afternoon. Yeah, that's something that you guys need to be made aware of as well. It can have an indirect effect on the dollar. But placing these orders, you guys need to make sure that you're placing the trailing stops and you're precise where they are and where the stop losses are. I've seen a lot of execution error on the orders, and then the guys don't understand why it doesn't work or why it doesn't hold up. Yeah. Now, one of the major things that me and Paul have been discussing as well, some clients have been complaining about losing all the range. Yeah. Once you start to get confident, yeah, you can take a stop from the middle. Yeah, so your order's there and you put the stop there, it cuts the risk down. But initially, when you're trading on things like euro pound, they're quite small. You only trade those ones on when you're trading on things like pound yen, and like cross pairs like New Zealand dollar, where you need a bigger stop. That's when you cut it down. On something like euro pound, you don't need to. It's only 6 pips anyway. Yeah, you guys get that? Yeah. Now, I know there's a few guys tuned in. Is there anything that you guys are not clear about? I know we're going to do some trading as well, guys, and I know we're getting to that, but I'm just going through some of the order stuff first because it's crucial how for you guys to get 10 or 20 lots a day consistently, yeah? And sometimes it's just about showing the mechanics of it. Is there anything that you guys want? Is everything sound good? Can I get like some just yeses from guys? Is there anything that people like anything? Stan, is that repetitive? Good. All right. Want to go back through the 3, 4 basic rules as well, yeah, because I think something was missed. I see some clients holding positions overnight, yeah. Sell high, buy low. Whenever you're looking at the market, you should always be. You should never sell here. Do you know why? Because you end up on the retail side. What happens is retailers think the price is going to break out here, so they decide to sell. But all you're doing is giving liquidity for the institutions to get out. You should always buy at the low. That's a common retail thing. I've seen so many clients buy here, sell here, and just lose money and never make money in the markets. Always make sure you guys are selling high and buying low. Doesn't matter whatever asset class it is. You never ever buy at the high and you never sell at the low because the institutions don't do it. If you want to follow where the smart money's going, you always have to follow sell high, buy low. Yeah. Now that's the first crucial rule. Anybody that doesn't get that rule correct will never make money trading an order flow market because you don't understand where the orders are. Institutions don't sell down here, they buy. That's why the price goes up. It's a self-fulfilling prophecy. It's cheap. Wholesalers buy things cheap. It's not great rocket science. Yeah, don't try and be with the market and sell here. You can try it. You might be lucky if the market's moving fundamentally, but try and do it for 1,000 days or 2,000 days, and we'll see. We'll see how you end up. You'll just end up losing a hell of a lot of money. Yeah. Now, in regards to coming back down towards more trade management after London Open, yeah, 15-minute timeframes is where you really want to be looking at. 5 to 15-minute timeframes where the orders are. Now, I like to trade supply and demand off the price. I like to get in and out on these levels, yeah. They work better when they couple together with support and resistance, yeah? But you don't want to be taking them in the middle of the ranges. They're the ones that get invalidated quite quickly, yeah? But these entries just off these supply and demand levels can quite quickly give you 2 to 1 or 3 to 1. Yeah, you might not always get filled on them, but you can see the price always comes back there to find orders because that's how the banks trade. They collect prices and they collect order flow. Yeah. Now, if you look at it, correlation wise, when you're looking on a smaller time frame, these levels are very accurate. Yeah. Now, there's 2 ways you can do it. You can sit, watch the screen and day trade it, or 2, you can place orders. Yeah. When place orders, place them towards the end of the boxes, not the beginning. Yeah. Never place orders at the beginning. Always place them towards the end. Yeah, 10 to 15 pip stop loss, no more, because it's good risk reward. Quite a lot of the times. The crucial thing that you guys all do is you don't allow the market time to breathe. Once you've got in the trade and you've understood how to sell high and buy low, that's 30% of the job. Now you've got 30% of the job in regards to trade management. Does that make sense? Now, trade management works 2 ways. One, you can study and study and study the fundamentals until you're confident about which way the market's moving fundamentally. That's one of the ways that I recommend anyway. Or 2, you can use a style that I use, which is by opening a number of trades to mathematically have a few of them run in your favor. I think personally, it removes the emotion, it removes the stress, and with the rebate, it's a killer because you can make a hell of a lot of money out of the income out of it. And that's the crucial thing. So mathematics does rule, if that makes sense, guys. Now, I know the second rule is always use a stop loss. Yeah, some guys don't do it. You just plain-heartedly go against it and just say no. Always use a stop loss. Do you know why? The stop loss gets you out of the market, removing your ego. You got taken out. When there's no stop and the market moves against you, you start to think, oh, will it come back? What you're doing then is you're trying to gamble and you're trying to call the market. The market doesn't care who you are, where you came from, what university you went to. It just cares that where the orders are. And you've got to remember that, guys, because I heard one client say, I just want to win recently. No, the market doesn't care if you want to win. The orders care where you want to win or lose. That's what you guys need to understand. Sell high, buy low, and allow the market to tell you which way it's going to go. You're going to have that type of mindset to be in the markets for 1,000 days or 2,000 days. Yeah. Now, you can't get off put by the process in the sense that you have a losing day or a winning day and you stop doing it. You have to go through the process. The reason why the orders and supply and demand work so well is because they give you a basic structure to doing 20 to 30 trades a day. If you do that on a 20K account, you're making $500 a day in rebate plus the growth out of the accounts. Yeah, some people have a lot of myth or ideology. Everybody asks, there was also another style. Obviously, we trade a variety of styles. This way is the fastest way to get you guys to break even. The other style is day trading, clicking the button. That is, we will go on to that as well. But for now, I need to go through London Open supply and demand and get you guys at least breaking even and making money out of the markets. The extent where you're day trading in and out and scalping, that's a lot more skillful, but also it requires a lot more stress and passion. This way is a lot more easier to trade the markets, guys. Yeah, so do remember that as well. Now, I know I'm going slightly off topic. Is there anything that you guys that I've touched on today that you guys want me to go through or understand? We are going to be working on psychology. We're going to be going through London Open supply and demand time and time again, morning after morning. Obviously, you can apply London Open to Tokyo and US as well. Yeah. Now, we will do some live breakout trades as well. Yeah, and we will do some trading days where we trade. Maybe we are going to be switching the live room times up so we can get more guys in here as well. I know at the moment we've just been running in the daytime, but don't worry, we will be starting to do that as well. Yeah. Now, if you're looking at, for now, you guys really want to be just concentrating on the majors. When you get bigger accounts, you can move over to things like pound yen, Aussie dollar, New Zealand dollar, things like gold, but they're very unforgiving. So in the preliminary stages, don't look at them because things like gold, they'll just either wreck your account or give you a full sense of security. At the moment, you guys want to fall in love with the process, understanding the results. So understanding where the market's going to be moving to. Yeah. I know we've still got about 15 minutes left. Okay, let's do a question and answer because it's always good, no matter how small. Has anyone got anything they don't understand? They want to go through fundamentally, technically, anything, guys? If not, I'm going to do supply and demand. Not at the moment. Okay, Ference, all good. Just on another note, most of the rebates have been. Yeah, most of the rebates have been paid. I think there's one or two that are outstanding. I know, Ference, I need to do yours. I think everybody else has got your rebates in anyway. Apart from that, let's just touch, because we've still got a little bit of time left anyway. London Open, are you guys feeling a lot more confident with it or not? Yeah? Maybe? All right. Well, we're going to go through London Open time and time again, yeah, till you guys get real confident with it anyway, yeah? Now, I want to just come on to supply and demand because a lot of people ask me how to trade it or how to understand it, yeah? Now, supply and demand, the reason why it works is because that's where the orders are sitting. When the banks trade, they never just trade at market. They'll never just get in at this price or that price we're looking at. They will always look for a place to place their order because what it is you want to buy with no emotion. Does that make sense? It's clear because when you buy at big volume, you move the market. There's clearly sell orders that have been triggered here because the market's come down to find buy orders down here. Now that's all the market ever is. It's a tug of war between buyers and sellers. As soon as there's an imbalance, guess what? There's an imbalance of sellers. Bang, the market comes down to find buyers and vice versa. Now, where you get the bigger moves, you know that there's bigger orders behind it because obviously it's more violent. Now, there's one thing that you guys do with supply and demand and with trade management, which time and time again new students miss out. You have to allow the market time to breathe for the market to move. To get that type of reversal here, you need 5-10 candles for that reversal. Make sense? Now, what you guys want to understand, sometimes when you get in off supply and demand level and the market doesn't do what you do within 3 or 4 candles, it's probably not going to do it. Make sense? If it hasn't done what you thought within 15, half, and 45 minutes, it's probably not going to do it. Does that make sense? Now, as a trader, all you can do is act upon the fact. You've got to get in and see where the market is. If somebody asks me, there's a reason why I never listen to anybody from trading floor to thing. I'll never listen to anybody that has an opinion. Do you know why? Your opinion is obscured the same way that any other retailer could be. I will never listen to somebody else that tells me. I will always look for a matter of fact myself, because then I know that if I was wrong, I looked for myself and didn't take it off the back of somebody else. That makes sense. Now, the orders are never wrong because the orders tell you where the price is going to go. So when you're looking at something like euro dollar, you can see where the orders are sitting. Now, these are the ones that have higher accuracy in regards to trade. You can trade in the middle of the range, but it's not so smooth. Now, supply and demand, these levels with a 10 to 15 pips risk generally give you 2 or 3 to 1. Yeah, so it's easy for you to hold and grow the account. One of the crucial things all you guys need to focus on, the rebate is an additional bonus. It's a benefit. Brokers that you guys have traded with up until now all give a cost back of the spread. It's just that these guys don't split it with you. It's because rather than splitting it, they pocket it, if that makes sense. Now, if you look at it mathematically, if you've got income as well as growth out of the account, it's phenomenal if you can do the volume. Now, that's the thing that you guys need to play on in the back of your mind. But you need to concentrate on growing the account as well, because that's the initial workhorse. If you can't hold that workhorse, it's going to put you off psychologically because you're always managing losing trades. The reason why you never hold a losing position over a 12-hour session is because every time you log in, if you log in and you've got losing trades and you're like, oh, what's going on here? It's emotional. It's stressful. You should treat trading as a meditation factor, not as a stressful emotion. So many clients get into positions and get stressful and call up and go, what should I do? What should you do? What should I do? Oh, the market came back. No, you were wrong. Your entry was bad. You were emotional. You weren't following the rules. You have to follow the 7 or 8 combined rules. Sell high, buy low. Always add a stop loss. Never hold a losing position overnight. Those are the crucial rules, because if you don't build them on small accounts, you'll never build them on large accounts. If you start holding positions over sessions where the market goes against you, that's a common retail pitfall. That's why everybody loses money. That's why the market makers make money, because you're never going to ever cash out, because what happens is you're on the losing side, if that makes sense. Yeah. Now, supply and demand works because that's where the orders are sitting. Now, on a high and low time frame, it works so well because it's the interim trend. It's what the institutions think is the price. Now, sometimes you have to allow the market to breathe. Yeah, when you do bring your stop loss to break even, it will get you out sometimes, but it's always better to have a protected trade than an unprotected trade for 2 reasons. One, it's better to find out for free whether you were right or wrong or not. It helps with your psychology time and time again. Yeah. Also, you can always have a string of losses. Footballer cannot be a footballer and not get injuries. It's just a myth. If you think you're going to be a trader and not run into a string of losses, you're how should I put it? You're living in La La Land. It's never going to happen. Yeah. Now, more so, I'm not too sure what that was, but also you need to understand the fact that the market's not as complicated as you guys think. There's only certain type of market conditions, the same way as you get seasons, winter, autumn, spring, and summer. The same way you get a bull market, a bear market, a technically driven market, a fundamentally driven market. There's only a few ways that the markets move. Yeah. Now, things like dollar yen, they work very well as in regards to supply and demand. They come back, they respect levels. Sometimes the euro can be a little bit manipulated. Things like dollar yen, euro pound, dollar Swiss, they work very well off these levels. They don't really breach them. If they do breach them, they follow through. Thing I think I'm going to touch upon now in the last 5 or 10 minutes is trade management. Yeah, guys, when you get into positions, candlesticks to form to allow the market to turn. If it hasn't done it within 3 or 4 candles, it's probably not going to do it. This is something that you guys need to take into account. Now, if you want to catch the big moves, guess what? The trades need to be open for a matter of hours, not a matter of minutes. That's why you have to learn the process. Get in, protect the trade, and see if the market's going to move in your favor. This is what you guys need to fall in love with. You don't need to fall in love with the wins. You don't need to fall in love with the losses. You need to fall in love with the entries. Getting in, stops to break, and allowing the market to tell you if it's going to go in your favor or not. That's it. If you can follow that, some guys, I know, like a lot of the guys that log into the live room, you guys are the new guys. Some guys that have been trading for a long time, they will never log into a live room because they know the information. Once you've learnt it, you've learnt it. I know it's a bit repetitive and we go through things time and time again. It's just so it's to embed it in the back of your mind. It's to make it so thorough and so confident that there's no room of fact. Yeah? I'm not too sure. I know we've got a few more clients. I'm going to send across all the rules. I know it's in the traders pack and stuff like that, but this type of stuff, you just guys need to go through it. You need to eat, sleep, and breathe it. Yeah, it needs to be repetition of the fact. You need to keep going through things time and time again. Trade management, to catch 30 or 40 pips, guess what? The trade's going to have to be open for 12 hours or maybe a couple of days, even in some instances. Then that, first of all, you need to catch the move 20 or 30 pips off the break even for that. If you think that you're getting taken out time and time again for 10 or 12 pips, that's more than enough risk reward if to catch a 3-pip trade. You've got to go through the mathematics, guys, yeah? Some guys do 10, 20 trades and have good results or bad results and get put off. You need to be showing, you guys need to be sending me P&Ls at the end of the month with 1,000 trades on them so I can really do some auditing. If you're sending me 100 trades, it's not enough. Yeah, I see quite a lot of guys. One guy sent me a P&L of 10 trades the other day and asked me to audit it. I was like, what do you want me to audit? You need to show me volume. You need to show me repetition. Practice is how you get perfectionist at it. So this is what you guys need to start keep going through and going through and going through. Yeah, okay. Now, any questions? Anything you lot guys want to go through? I think the next sessions, what we're going to be going through, we're going to be breaking down. We're going to be doing some trades live on the day-to-day timeframes as well. Is there anything that you guys want me to be going through again at the moment? Any questions? Any of the new guys? Anything that you guys want me to touch upon? Feel free. Don't be shy. Okay. Nothing from no one at the moment. Yeah. Just want to go through the few rules before I let you go. Sell high, buy low. That's the first rule. You will hear me drill it again into you time and time again. It's not a self-fulfilling prophecy. Institutions sell high, they buy low. When you buy a big volume of anything, you always buy at discount. Make sense? Perfect. Be precise with your orders, especially London Open. When you're placing orders, make sure you're putting the stop losses, the trailing stops in the correct places. I'm seeing a lot of clients place London Open orders and have slight execution errors. Be precise in the orders. Yeah? Make sure you guys are putting it in the correct place. From the high, you want to be selling 3 to 5 pips. On the low, you want to be buying 3 to 5 pips, trailing stop. Yeah, you can place 1-to-1. Do stick to things like euro, pound, and dollar yen. The ranges are tiny. They're very small risk. Even dollar Swiss, you guys should be taking confidently 6 to 5 trades off these guys every single day. It's an easy 5 or 10 trades a day. Coupled with supply and demand, that's giving you easy 10 or 20 trades mechanically a day, which you guys can take just of orders, plus the trades you can take off your own strategies. Guys, you get it? Also, one thing as well I want to make you guys know, do target the minimum rebate. Do target 50 to 100 lots minimum. Some of you guys are way beyond that. I know some of you guys, I know one client did last month in total 2,700 trades at one lot. So I know some of you guys are way beyond that. Some of you guys are in the infant stages. But do try get out of the smaller accounts sooner rather than later. One thing I find on smaller accounts, guys that sit on it for too long, you build bad habits and give false sense of security. When you're winning or losing a fiver, it doesn't really affect you. When you win or lose 5 or 10K, it has much more of an effect. And that's where I want to get you guys to sooner rather than later, because one of the beautiful things about this with the rebate is anybody with 10 or 20k can make a hell of a lot of money within 12 months. I've seen juniors do it. I've seen seniors do it. I've seen people come in with no experience and do it. You have to have a passion for it as well. And that's why we're here. We're here to give you the ongoing coaching, the guidance. Do you understand? We are teaching you to fish. We're not giving you, we do give you trade calls in a certain sense where we know where the market's going, but we want to get you guys confident in it. When your mindset's competent about the decisions that you're making, that's when you really make money out of the markets. You need to be profitable for a few months to give yourself an ego in the markets as well. Some students that started with us at the beginning now are showing some good results. They're getting a lot more confident. It's about practice. I think the main thing that all us guys need to concentrate on now is mathematics and repetition. Yeah, repetition is crucial. I need to start to see P&Ls where guys have done 1,000, 2,000 trades consistently for 3 to 6 months. That's where you're going to get the investor funds on the back end. If you've shown us for 6 to 12 months consistently turning volume, why wouldn't we give you money? It's beneficial for you. It's beneficial for us. It's beneficial for investors, and we can all make money out of it. So that's really where we want to be going. All right, guys, what I'm going to do, I'm going to wrap up slightly early today. I've got coaching calls at 2 o'clock, bang on. So all rebates have been processed anyway. I want you guys to start focusing London Open. I don't want to hear anybody holding a losing trade more than 12-hour session. If I find anybody doing that, I will revert you guys to the rules. Yeah, I know I've gone through the rules. Some of the new guys, I'm going to resend the rules with you just so we're all up to date with each other anyway. Yeah, let's start going through the process. We will post this as well, and we will get some other stuff going as well, where I'm going to start to work on psychology with you guys, and just try and get you lot out of the pitfalls of some of what the retailers do as well. And let's get some real volume done this month anyway. You may be experiencing the... Okay, I don't know as well. I'll be sorting out the audio quality as well. I'm not too sure what happened. Is there any more questions or queries, or we're going to wrap it up for today? Any questions, guys? All right. Well, thanks for joining us. I hope I've been of some use to you guys. Of some use to you guys. And happy trading. And we'll pick it up at the next convenient point.